Morning, crypto lovers out there. This is Obi-Wan Assassin, the Auto Block Assassin, and here to look over the charts this morning. Saturday morning here in Australia. We've had some movement overnight that I'm looking forward to taking a look at. Got a trade that I put through on a paper trade, and yeah, I'm kind of wishing that maybe I actually put it through. I'll show you why that I didn't. But now that we've had some movement, I'm kind of wishing that I did. So if you've got any charts that you want me to take a look at, if you want to show me your results, let me know. Post those results in the Discord group. And if you don't know what Discord group I'm talking about the Onyx Trading Onyx Trading Discord group. All right. So let me share my screen. One moment. All right, guys. Let's jump right in. Let's look at these charts. All right, DXY. I readjusted my thinking on the DXY yesterday. Blue line being where I think we are going to go. I think we're going to jump up, and I think we're going to retest a higher price on the DXY, and that's going to mean potentially a retracement with BTC. I still think it's going to happen. And what I want to show you with that thinking is Matic. Let's make sure my mic's on. Yeah, we're all good. Matic. So this is a trade that I jumped in on last night. I was watching another trade by one of our group members in the Onyx memberships by Ken. And Ken posted this trade. Hopefully you don't mind me sharing the image, Ken, of your trade. It's actually not a bad trade. It's not a bad trade at all. This was Ken's. This was Ken's trade. Wait, no, we don't want to download it. I want to view it. Okay, fine, we'll download it. That's not it. That's not the trade we're looking for. Copy link. Let's try that again. This is hopefully the trade we're looking for. This one here. Okay, so for Matic, prices come up. We've had a drop, a base, quite a big rally up, broken structure. Broken the structure from here, leaving this demand area where Ken has targeted here for a long. Not a bad trade. Not a bad trade at all. I didn't jump in on this one because I was waiting for Bitcoin to come down. And I have a rule that I'm now starting to follow, which is rule number 5. Rule number 5. Probably don't remember what rule number 5 is, but rule number 5 is we don't go against the BTC bias, the Bitcoin bias. We don't go against it. And when I say we, I mean me. These are my personal rules. And they may change over time. In fact, they probably will. But this is the rule that I'm following. And the bias that I have on Bitcoin is it's going to come down. So I just paper traded this. I didn't actually take this exact trade either. So I'll show you what I did. I waited. So arguably, if I had to put this one through, Ken would have got a better trade for sure. Ken's trade was down here. I waited for confirmation. It came into that zone. Price came back up, leaving another imbalance right here. I targeted this imbalance. I set my stop loss to be well below the swing low. Perhaps that could have been lower. Sorry, higher. Perhaps we could have gone and grabbed a bit of a much more sweet deal by doing that, but I didn't do that. And prices come up. Prices come up. It's pretty good. Well done. I hopefully you have taken your partials, or at least locked in that profit. I'm hoping you have. Please tell me you have. So important to lock in our profits. And this one's looking like it's going to hit. Now, reason why I didn't jump in on this trade is simple. At the time last night, it looked like, and still possibly may be, that Bitcoin has tried to come up, tried to create a new higher, but had a swing fail. And because it's had a swing fail, I'm expecting it to retest the bottom here. That's what I'm expecting. And because I'm expecting that, because I'm thinking the price will come down, I'm not going to take a trade against what I think will happen. Even though I really wanted to make this trade. I really wanted to jump in. And if I had jumped in, I would have made a profit by now. Oh, it's so tantalizing. That's why I paper traded it. Very good trade though. Very good work on that one, Ken. And perhaps the fact that I'm so careful with my trades right now, perhaps that means I'm not going to jump into every single trade and potentially lose the opportunity to make a bit more money there, for sure. But I wasn't sure about that one. And I still think we might see Bitcoin come down and retest this price, or at least retrace. But the good things that I did notice about your trade, when I went through and did the analysis, and I'll just do that here again, to show you what I did like about it, and why I chose in the end to do a paper trade. No, I could have done nothing. I could have just forgot about it. But no, I decided to test it out, because when I did my fib from the bottom of this range here to the top there, to the top of where it went to, it had retraced between the 5 and the 6. I don't know why I didn't see this before. Maybe I did my fib wrong. Maybe I just wasn't in the frame of mind to be analyzing. It can happen. But when I did my fib again, and I realized, yeah, you're actually between the 5 and the 6 here, nearly at the 60% retracement zone, which is where I like it to be, then yeah, it's pretty good. Pretty good idea there. It ticked a lot of boxes. The only rule that it didn't tick for me was that rule number 5. Rule number 5. Which is, I don't trade against my Bitcoin bias. So that's why I didn't put that one in. So what am I waiting for? What am I personally waiting for? I'm just waiting for Bitcoin to come back down. I'm waiting to see what happens here, because at this point it's too close to the 50% mark for me to actually take a trade. I'm not going to do a short here, because Bitcoin could easily shoot up. And if it does shoot up, then that Matic trade that you're in is fantastic. If this shoots up above the 50 and gives me a good solid run up here, and I feel like we're going higher, that to me is a perfect opportunity to hit Matic where it is. And where is Matic? It's in the discount prices. I'm just waiting for Bitcoin to be going the way that I want it to be going. That's what I'm waiting for. I'm waiting for Bitcoin to be going in the same bias as Matic. And right now, it's hard to say exactly what bias Bitcoin is, because we have had even lows here. Relatively even lows, which doesn't really give us an indication of where it is. And we've had even highs coming up here. So we have had low come in, even highs. I would expect to see this range down and give me some even lows again. That's what I'm expecting. And look, that is just an uneducated guess. But that's what I'm expecting to happen. Because we've had these even lows here, we could have these even highs up here. We could have these relatively even lows. And if that's going to be the case, if Bitcoin here fails to come up and give us an even high, then it's going to come down. It's going to retest these, and that means the bias is in the wrong direction, and my Matic trade would be invalidated. Just happens to be, in this particular instance, a bit of luck, in my opinion. Having said that, this is a great opportunity to find longs for Matic, as long as the bias is in the same direction. Looking at ETH, ETH is interesting. ETH is really interesting right now. Let me just get rid of my fib so that we can see the entire thing. It's not that I want to take any kind of punt on ETH right now. We're at the 50% of the range, so again, I can't make a trade on ETH. It has broken through this high here, so that is kind of bullish. We had an even high come in here, and we've come to push past to create a new high. We haven't quite broken the structure here yet. A bit more of a push, and it will have broken structure. And what does that mean? Well, it will mean ETH will have broken structure. But could we say Bitcoin's broken structure? Not quite. Interesting times. Which one are we going to follow? That's the question. Personally, I follow Bitcoin as the market leader, but ETH is pretty similar these days. So what am I waiting for? Well, unfortunately for me, for Bitcoin and ETH, the time for taking a long has well and truly passed. I've missed that opportunity. So I'm just going to have to be patient here. I'm going to have to wait for either the price to come down or the price to go up. I'm hoping for the price to come up here, and I can take a short back to the midline, or maybe even lower if we're lucky. This does seem to be a level here where we're getting quite a bit of action at the mid top of the range. Maybe worth a short there, as long as that short is bulletproofed. And for the top of the range right here, well, that's a definite short. We're probably going to be ranging, unless we start seeing some hugely bullish moves. But if we were, it would have been way better to get my long in these areas here. And why have I picked these particular areas? Well, maybe I can rejudge them because we've got a new high. But let's take our fib all the way to the top of where we were. All right. That's actually very interesting. I was targeting, okay, bottom of the range was targeting here, of course. I was targeting the 60% retracement. But we now have a new high up here, and this probably needs to come a tiny bit higher. There we go. We have a new high up here, and that means we actually have a new zone here at the 50% level, which could potentially be a target. It's nearing the 50% range, but it's not quite there. It is in. If we just get rid of this fib here, and we have a look at where we're at, from the 50% line to the bottom of the structure, we are now in the top half. There we go. We're in the top half of the bottom range, which isn't the greatest place to be taking along. It's not. I'm not sure if Nick would be wholly supportive of that, but it is something to look at. It's definitely something to look at. So if I'm going to take a long here, what would it look like? 50% of the zone. Can we get a at the top of this? And these ones would now actually have to come probably to there. That gives us a 5 RR, a 5 risk to reward ratio. Pretty good. Pretty good. Would I put this into Bybit ready to go? No, I would not. I wouldn't put this into Bybit ready to take up. What I would do is set an alarm right here. If the price comes down into my zone, I want to get alarmed so I can come and watch it. I would want to see the price react, similar to what we saw in Matic. Because I'm not sure of it, I do what I did here in Matic. So on Matic, I wasn't quite sure of this trade, didn't know if it would work out or not. I wasn't willing to necessarily trade from here, but it was an area that I was looking at. So instead, I waited for the price to show me what it was going to do. And price came down into this what is this? This is a demand zone. Price jumped up, had a big reaction off here, and that reaction was like, that was what triggered me to say, yep, okay, there might be a valid trade here, because it's come up in broken structure. That's when I put this trade here on. This was the order block within the demand zone that triggered the break in structure. So that was where I put my order. Price came back down into it, triggered, and then boom, up it went. Now, that's what I'm thinking about doing for ETH. Because I don't know exactly what sentiment I'm going to be feeling as the price comes down. I don't know what Bitcoin's going to be doing. I assume Bitcoin will be ranging back down and hopefully turning around. I'm not going to try and catch a turnaround. I don't like to try and catch a falling knife. It's never a good idea to catch a falling knife, right? So what I do is I wait for the price to come in and I watch it have a small move up or a relatively big move up, and that's when we'll put an order in the order block and we'll catch it on the retest. That's the idea here. So 3 potential zones for Bitcoin, for ETH. Now you might be wondering, why aren't I doing this on Bitcoin? Well, I'm not sure if I like the Bitcoin chart, to be honest. When I pull my fib on Bitcoin from the bottom of its range to the top of its current range, and somewhere between the 5 and the 6 is potentially where we want to be taking a long here in Bitcoin, because it probably will come back to test it, but I can't really see an area that's fitting within that space that I want to target. You could look at this area here, but that's not a big enough discount for me. It's above the 5. So that's not it for me. Could take this whole breaker block right here, which is right on the 5. You can do better. You can get more of a discount. But there's not much opportunity on this chart, as it looks to me, to get that discount. So I'm going to skip the Bitcoin retracement idea, and I'm only going to take Bitcoin if it comes right back down to the bottom of this base. That's the only time I'm going to be interested, because at that point I'm most secured. I've got a nice big stop here. I'm not likely to get stopped out of this one. And if I do get this triggered, I can watch in this area too, and I can actually get it re-triggered into a second long on my sub account. I've got 2 accounts in Bybit. I've got my main account and I got my sub account. That's my idea. Did we just get a new follower? Who was that? Sorry, I missed that. It was in my chart. Didn't even see it. We got a new follower. Thank you. Thank you for watching. Thank you for following. I'm here talking about Bitcoin. Well, I'm here talking about crypto most days. If you've got any questions, let me know in the chat. If you want me to review a chart, Voyager is dead. How's it going? If you've got any charts you want me to review, let me know. Let me know. Happy to review any charts that you want. We use smart money concepts here. We are not retail traders. And for me personally, I'm here to minimize my risk. So I'd rather not be in a trade if I'm not 100% sure of it. It's got to break my, not break. It's got to follow my 5 rules. And I'm going to keep repeating those 5 rules over and over again so I remember them. All right. So that's my plan for Bitcoin. For Bitcoin, I'm going to leave it until we hit the bottom of the range. I'm not looking to catch that fallen knife. Short term, looking at the DXY. This is my plan for the DXY. And usually by looking at the DXY, I'm pretty, not spot on, but I'm pretty good at figuring out roughly where things are heading, right? So as the DXY comes down, the Bitcoin price goes up. As the DXY goes up, generally speaking, Bitcoin goes down. Now I'm expecting it to come in and retest a higher price before falling. So I am expecting a slight bullish run for Bitcoin in the medium term, but in the short term, I'm expecting this to come and retrace, and I'm expecting to see cheaper prices on Bitcoin. I'm thinking this, because we had a swing failure here, we didn't quite reach the 50% mark of our structure, and we didn't quite break free from here yet. I am expecting this to come and retest the bottom half. So that's when I'm going to pick up my discount. And it could go the other way. If it does go the other way, I'm not out of options. I've been saying many times, I don't trade at 50% of the range. That's a bad trade at 50%. But if Bitcoin shows me bullish behavior over here, well, then it's time to go look at the altcoins. Find the altcoins which are at the bottom of their range and do a long. So we're looking at Matic. Matic is primed at the bottom of its range. Has been for a while. So if Bitcoin shows me bullish moves, I'm going to jump onto Matic about this area here and take that long all the way at the top. That's my plan there. I did have a long overnight. I wasn't comfortable with it. I only did a paper trade. I wasn't comfortable with this particular long. I just wanted to be in because you know that feeling? You know that feeling when you just want to be in a trade? I do too. But that feeling usually leads me to take big risks. So now when I feel that feeling, I do a paper trade. And kind of wish I put this trade on, but this trade went against my rule number 5. Rule number 5. And my rule number 5 is I don't trade against Bitcoin bias. And what I mean by that is if I think Bitcoin is going to come down in price, I'm not taking a long on any other coin. That would be counterintuitive. I could be wrong about Bitcoin. I could be very wrong. This could be a bull run, and I will have completely screwed it up. That's fine. That's fine because I'm not in a trade. And to me, it's just not quite looking bullish just yet. If this price breaks this structure, then I am bullish on Bitcoin. Then I am looking to take those longs on Matic and other coins. Let's take a look at XRP. This is something we've been looking at for a while. Where are we in general on our XRP? So we're nearing the 50% of the range mark on XRP. This is not any time where we should be taking any type of trade on XRP at all. But you know what? It did exactly what I said it was going to do. We have these marks here. These money marks here are my stop marks. These are where people are placing their stops. See, I don't use indicators. I don't use any indicators at all, ever. That's not how we trade with smart money. With smart money, supply and demand, we're looking at where retail traders place their stops. And we're watching investors come in, smart investors, big investors come in and literally take those stops. And that's what's happened here. We've had these even highs form, stops were put on those even highs, and institutional traders have come up and taken them. If this wasn't at the 50% mark of the range, I would have absolutely put a long right there. In fact, I did want to put a long there, but here would have been a great place for a long, but it was just too close to the top of the range for me. It's far too close. So I didn't do that. What I think is going to happen? We'll be coming up and we're retesting the 50% mark for XRP. If Bitcoin does start to retrace for a test, obviously XRP is going to come back down again, probably to here or potentially to here, and we're going to see it bounce back up. So I'm looking to pick up XRP down here. I'm not sure what this line here is. Just get rid of that. It's just noise. Plus it's not straight, so I get annoyed by it. So I'm looking to pick up XRP down here. If we have a look at a fib and we look at the bottom to the top, a potential place to pick it up would be here as well. This is the bottom of the range, more or less. This is the 60% mark. When I say 50%, is that from the top of where retail's? Okay, so what I'm saying is, when I say 50%, we take a look, we take a scroll out, and we take a look at the structure of the price. And I know I've got a lot of crap on here. We don't need to talk about any of this stuff while I'm talking about this. This is the easiest part of trading. This bit right here. Just let me blow my nose once. Excuse me. I think someone must be mowing their lawn around here because I'm getting the sniffles. All right. When we think about where we want to take our trades on our chart, the first thing we ever need to do is take a fib from the bottom of the chart, the very bottom of the price structure, to the very top of the price structure. Now, we're not using the fib for any sort of magical tool. We're not using this to say, for some reason, traders like to do stuff in particular at Fibonacci levels. No, we're just using this as a ruler. And that's all we're really using it to. It's just a ruler. Nothing magic about this. I draw a line at 50% of the fib because that is the mid-range between what we call discounted prices and premium prices. Now, I don't know about you, but when I buy anything, I like to buy at a discount. And the same goes for coins. Same goes for fiat. Same goes for stocks. Same goes for whatever you are trading with. We don't trade unless we get a discount. And what does that mean? That means we take short. In fact, this is a rule. This is a rule. Rule number one. Rule number one for me, I'll read it out to you. Shorts at premium prices and longs at discounted prices. Basic. That's the most basic rule for me. Shorts at premium prices, longs at discounted prices. So my shorts come from above this 50% line, and my longs come from below the 50% line. It's so simple. Don't ever get trapped into thinking you should be doing a long up here. If you think that you're bullish on a coin and it's in the top 50% of the range, don't go long. Your time to go long is down here at the bottom. Don't think you need to be in a trade to make money. Okay? You don't need to be in there. If you're in the top and you're taking a long because you think the XRP is bullish and you just want to catch that big move up, you're risking yourself catching a medium move up and a retracement back through your stops before it goes long on a huge big long. It's just too risky. I only like to trade where I have an edge and I want my discounts. All right, so let's go over rule number two. Rule number two. I never trade at 50% of the range. This line here is 50%. We never trade at 50% of the range. It's not a good trade. You have no edge whatsoever. May as well just walk into a casino. It's a gamble. We need to be trading where we have discounts. This is Smart Money 101. Smart Money 101. And this is what I've been training myself in through the course that I'm in and through my coach for the last 6 months. Smart money concepts. Rule number three. Rule number three is we must target the next order block and the return for risk, the risk to return, must be greater than 3. What do I mean by that? And look, it's not always targeting the next order block. Like this is a long that I was planning. The next order block up would have been this guy here. So you're almost guaranteed to test that. But I'm pretty sure that we're going to go higher than that. So this is the order block, the top of the order block at the very top that I'll be targeting. And the risk to reward is 4. So that's well within my rules. 3 is the minimum. And look, we can't quite get 3 out of this particular trade. If I was a bit more greedy, I could bring my entry price down to the 50% of the order block. And we get a risk to reward of 4 there, which is a much better trade. So I'd probably be putting that one in the system, honestly. I might go fix that up. Because that looks like a better trade to me. Much better reward. Much more likely that the price is going to come up and test the top of this. So that's a better trade. That's a way better trade. This is why I have my rules. We go through them. We make better trades. All right. What rule was that? That was rule number 3. Rule number 4. And there's only 5 rules, so don't worry. This isn't going to take too long. Rule number 4. My stop loss should be 25% of my order block. And it should be set at a point where if I'm wrong, it means my bias was wrong. Right? So this is 25% of my order block. My order block is this purple box here. If you want to learn how I find these, well, I am the order block assassin. But keep watching and you'll learn how I find these. Once I show you what an order block is, you'll see them everywhere, and that's the problem. That's the problem. Because if you see them everywhere, then you're not picking the right ones. That's why we have these rules. A lot of people like to start learning supply and demand trading, and they go nuts thinking they should just trade off any order block, but you shouldn't. You should not be trading off every order block. There's only very few specific order blocks that you should be looking at in your zone of interest. All right, so this one here, where was I going with this? Rule number 4, stop loss at 25% of the OB, which means there's an overlap of my stop loss of 25% of the original order block, which is sitting in the demand zone for a long. This is the demand zone. This is an order block within the demand zone that I'm targeting. My stop loss is 25% from that. And I should only be interested in this trade if my stop loss is at a point where if the price comes and breaks my stop loss, it means my bias is changing from bullish to bearish. All right? That's how it goes. If my bias changes by the stop loss going down there, great. Fantastic. If I'm in a trade and it hits my stop loss and then still goes bullish and I just completely lost my trade and it still goes bullish, well, that's a huge fail. That's a huge fail. And that's what I'm trying to avoid here. Whoops. So stop losses at a point where if I'm wrong, my bias will switch from bullish to bearish or vice versa. And last rule, and the most important one, rule number 5. I don't go against the Bitcoin bias. What I mean is before I place any trade, even if I'm bullish on XRP, or if I'm bullish on what was I looking at before, Matic. If I'm bullish on Matic, I do not place a long on Matic if I am expecting the Bitcoin price to come down. All right, Voyager, if it goes down to my stop loss and you get bearish, wouldn't the market makers and traders believe it'll go down more and short it back up? Okay, first of all, well, market makers. But wouldn't the market makers believe it to go down more and shoot it back up? All right, market makers are working on a much higher time frame than most traders, and they're using the same concepts. This is the concepts they're using. And if the price does come down and change direction, well, that's not a trade I want to be in. I don't care what they're going to do next. I'm looking, like I want to get out of the trade if my bias has changed. I want out of my trade. And then I'm going to be waiting to see market structure, to see price structure, show me where it's going next. And remember this too. If I'm looking at Matic, where's Matic? If I'm looking at Matic, right? And all of a sudden, at this point here, we're in the bottom 50% of the range, right? Remember rule number 1, we only take shorts at a premium price. This is my rules. This is not your rules. This is not market makers' rules. These are my rules because I know these work. If this price comes down, breaks through my stop loss, and all of a sudden I'm bearish, that doesn't mean I jump in. I don't need to jump in on a trade. I don't need to risk more money, especially if we are in the bottom 50%. I shouldn't be taking a short at the bottom 50%. That's a ridiculous idea. But I could take a long all the way from the bottom to the top here, jump out and then go bearish. Absolutely. Absolutely can do that. That is absolutely doable. I could be in a short from the top all the way down to the bottom here and take a long. That can absolutely happen. That can happen. And bearing in mind, for Bitcoin at least, for Bitcoin and ETH, we are 90% of the time we're in a range. 90% of the time we are in a range. So if the price is hit the top of the range or in the mid part of the range and it's coming back down and it's coming back down to the bottom, most of the time, you can probably go long and it's probably going to turn around and show you a new price structure. And if you're not sure, if you don't want to take that risk, which I highly recommend, not even taking that risk, there's so many opportunities here to jump in. And we did them yesterday in some back testing. I might do some more back testing today. Look at this. Look at this. This is the price structure of Bitcoin. And I'll show you where we got this from. Let's run through here. So Bitcoin at the moment has been touching this demand zone right here. This huge demand zone, which comes all the way back from history, on the left side here. On the left side, we had price zoom up, a nice big rally. That was cool. Price did a price based did a drop, rally again, and a base right here. And then we have this lovely move up here, a bullish move up that broke this structure right here. And this particular move created a demand zone right here. And this has been sitting there. This demand zone's been sitting there this whole time, as they do. Fast forward to today, and I got another demand zone down here that we could get to at the 1200k mark. We could get there. But looking where we are today, price has come down and just touched on this demand zone, and people are like, yeah, that's where I want my Bitcoin price to be. I want to buy at 15k. That's cheap. Price zooms up. That's what's going on here. Retail investors, not retail investors, smart money investors, people with hedge funds, people from institutions have marked this area out as a big area of cheap Bitcoin. So to get through here, we're going to have to tap this a few times, and this price should go deeper and deeper and deeper into this zone before we start having to worry about it breaking free and doing another free fall. So we will probably range here for a while. Now it's our job as smart money traders to use this to our advantage to get good trades. All right, so if I go down into the 1 hour, and I'll show you where you could call this. I didn't catch it this time because I was just starting to stream for the first time. I was getting my bearings and I completely missed this. I should have seen it happening. We have an order block right here on the 1 hour, right here. So this is a, what does it look like on the 4 hour? It's not a 4 hour order block. This is a 1 hour order block, and this one's quite big. This is a big order block. If you go into the 15 minute, we can maybe zoom in and get some detail there about what actually happened. Even on the 15, this is still a big order block. And within this particular demand zone, which is a new demand zone, we have a 15-minute order block right here. This is what I should have done. Price came down, created this imbalance right here. And you can see here, came down back to origin to test it again. This is what smart money does. It'll create an imbalance, price will come down and test it, and price will shoot off. All right, so price did that. Now price came back into this demand zone again. And it created, well, it went through that. It busted through here. When price busts through a demand zone, it is mitigated. This demand zone is now mitigated. Price has busted through. Look at this. Price went right through it. Right through it. Creating another dip into this big demand zone down the bottom. And it shot back up. As it shot back up, price has based. So we got a drop, a base, and a rally up. Right? You could have taken these order blocks here, this one right here. You could have done a long right here. From the 50% of that to 25% of your OB, that would have been the perfect trade setup. The perfect trade setup. That would have been wonderful. I wish I did that. I wish I did that. You could have made other trades. There are so many ways to read this chart. It is like a language that you make up for yourself. Have this massive order block right here. Price dropped down. Price raised a bit. We had a rally. We had a base and another big drop and a big rally up. All right. You could have taken that. My rules are we take a long at 50% of the order block. Price came back down. Where would I be targeting for this? This would be take profit 1, giving me a 3 times return for risk. What I mean by take profit 1 is I'm taking 50% of my profit from there and then letting it ride. And setting my stop loss to this point here too. That would have been a great trade to be in. And you can see here how we can see that's what the price will be doing. Price comes back down, shoots back up, and that's when we target the original imbalance that it created. This is the imbalance. This bit right here, that's the imbalance. I'll show you a close-up. Imbalances happen when we have a big push of price. That creates a new structure. That is an imbalance right there. And you can see price came back to fill that imbalance. And that's what we're targeting here. I know that's a lot of boxes. I know the boxes make things messy. I'm going to get rid of this one because that one is mitigated. So when I take a long here of Bitcoin, I want to make sure that I have a stop here long enough that the price can dip into this huge demand zone here and not wick me out. That's the plan here. Oops, I don't want to get wicked out. So I'm waiting for Bitcoin for that price to retrace. I don't like the price structure around here enough for me to take a trade, but if I look at ETH, I love the ETH price structure a lot better. In a similar story, ETH is tapping into this huge demand zone down here, this purple demand zone. It's tapping into it. And I expect ETH is going to come and range down here and tap into it a few more times before we have to worry about any kind of structural failure. Now these are the zones that I'm looking at for ETH. I want to jump in on them. I've marked this zone, this line here is 50% of the big structure of ETH. That's 50%. Anything under there is a discounted price. And for me, I've mapped out this line here too. This is 50% of the discounted price. So these are really discounted prices down here. And these are kind of discounted prices down here. Now, I'm not going to be making any trades nearing the 50% of the range. That's what I'm not planning to do that. What I would like to see for me to be interested in ETH is a retracement between 50 and 60%. And we can get that here. There is a trade there that might be viable. I might like to put a bit bigger stop on that, just in case. Yeah, that looks better. Nice big stops. I do not want to get stopped out and then the trade continue up. That's the worst. That's the worst thing when that happens. So for me, I will be looking to pick up ETH from any of these three spots. This first spot here is not a huge, big discount price for me. I prefer to get under the 50% of this particular range and get a discount. It's Black Friday. We should be getting massive discounts. However, if I see price come down and push back up, so if I see this, I'll show you what I'm looking for. Let's just say price comes down into my area of interest right here and it ranges in here. Get a bit of a base forming. So we've had a drop, have a base. If I see price shoot up and break structure, that's when I know that we have something going on. That's when I put my trade on. And I'll be trading the order block that it came from. This trade that I have planned here, it may get modified for a better return, a better risk return ratio. It may get modified. but price will come back to origin and price will shoot back up. That is how our smart money concepts work. We have a drop, we have a base, we have a break in structure, we get a return to origin, and we get a push up. That's the structure that we're looking for. That's the secret sauce here. And for me, well, a lot of traders when they first learn this will start trying to trade this concept off every single order block, and that is a mistake. That is such a mistake. You will lose more money than you'll make. For me, I know the structure that I'm looking for, but now it's making sure that I'm looking for it in the right places. I need a minimum 50 to 60% retracement, preferably a 60 to 70% retracement, which is this one right here. And even then, when you're nearing the bottom of a range, even then, I'm going to make sure that I bulletproof my trade. Bulletproof means when the price moves up out of my zone, I am moving my stop loss back to my entry point. So that the most I can lose is $0. Because even though it's at a decent 60% retracement level, even though I'm getting a discount of 60% here, price could still go to the bottom of the range. You could still tap that bottom of the range real quick. So you need to be aware of that. That's why I bulletproof my trades. The most I should be able to lose is 0% once I've bulletproofed. And if price shoots way back down, well, it'll do that less at the bottom of the range. It's less likely to shoot back down and completely take my stops at the bottom of the range. But it's still possible. It still happens. That's why I have multiple plans. Hope that helps. That's the plan for ETH. So I'm just watching. Now, what is interesting about ETH is we have this break in structure right here. This bullish break in structure. And that bullish break in structure is the reason why I'm now putting this long here. It is a 60% retracement. It's not exactly where I want it to be in the bottom half of this bottom. So it's not a discounted price. It's just a discounted price. And it's bordering on being too close to the 50% range for me. But it is just within that range where I'm interested. So I would prefer it to come down into this zone and take that trade. But I will also take this trade here. Now, one of the other things that I was looking at this week was BNB. So let's take a look at BNB. If you guys have any coins that you want the technical analysis done for, this is your opportunity. BNB. All right, we have broken over the 50% of the range for BNB. That's kind of exciting. These money points here are where I identified that we have stops. By stops, these are retail trader stops, and as you can see here, price came down and it swept them up. It took those stops, which would have been put right there with that even low. Even low comes in, retail traders put their stops, and smart money comes and takes those stops and pushes the price up. That's what they do. That's what they do. So for BNB, we're at the top half of the range. We can be looking for shorts soon. We can be looking for shorts soon. But I would expecting to see a higher high. So once we get to here is where we start looking for shorts. What's happened previously on BNB? Let's just have a quick look. Even highs. So you can see here we had even highs on BNB, meaning retail traders come in, put their stops. Smart money's come in and taken all those stops and pushed us up into this demand zone here. I wish I had this trade on. I had it planned. But I was busy that week. Oh, that would have been lovely. My plan was a little bit over, what's the word here? Over exaggerated. I probably could have got it to here. That would have been great. But that was my plan. My plan was to grab that short and I just missed it. Oh, no, I didn't. I just missed the entry. That's what happened. I was just slightly off. Wouldn't that have been lovely? I was just slightly off. Oh well. I'd rather be slightly off than get stopped out. I'll put it that way. Let me just get these lines lined up. I can't stand crooked lines. Come on. Up you get. Get this one straight too. Alright. So what's going to happen on BNB? What I've been seeing on BNB is really interesting because BNB used to follow the Bitcoin charts really closely, but now it's kind of not. It is a little bit, but it's also veering on its own path. What's going to happen? Okay, well, let's get rid of this stop. These are now gone. That's gone too. What do we got here? Did someone just follow me? Thank you for following. Where is my screen? I missed out on seeing who it was. But thank you for the follow. Thank you very much. I really appreciate it. If you want to learn about Bitcoin, this is the channel. We're talking about smart money concepts. I'm showing you everything I know about smart money. We're following my trade journey from $100 to 100K. That's what we're doing here. I'm going to be streaming until I get that 100K, and probably beyond that, honestly. Started with $100 in this account. We're up to nearly 500 now. And lately, the reason why I'm streaming is because lately I've been getting it right. It took me a long time. I didn't just all of a sudden start getting good at this. No, actually I did. I did all of a sudden just start getting good at this. It's just, it took a long time to get there. After 6 months of training and trying and failing and learning and getting coached. Thanks Ginger. Thanks for the follow. After 6 months of trying and failing, and look, I spent thousands and thousands and thousands, learning and failing, learning and failing, learning and failing. And I spent thousands on my coach. I've got a great coach. He's fantastic. I'm part of a coaching group, and together we learn and we show each other charts. We share charts. We give each other all sorts of great advice. And hopefully a lot of those guys from my training platform are here today to watch. So it's been a long process, but lately I've been getting it right. And that's why I'm here to stream. I'm here to show you guys what smart money is all about, and the kind of information you're going to be learning here. It costs thousands and thousands to learn. Now, you're learning off a guy who's an amateur. I'm not a professional, although I trade nearly all day, every day. I'm lucky enough in my life that this can be what I do because I love this. I love this. All right, where am I going for BNB? I'm going to be waiting for this opportunity for a short. Potentially, if we're not going to get a higher high, if we don't get a higher high, my first area of interest is right here. Not saying that as soon as the price enters this area here, I'm going to take a short. No way. But I'm going to watch the price as it comes to here. If we get a price structure that looks like this, if the price comes up into this area of interest, and we get a bit of a rally, and we get a push down, that's probably like, hey, something's going on here. Yeah, Carmania. Or Caramania. Yeah, you're in the course too. Fantastic. Nice to see you, buddy. Thanks for watching. Thanks for the support. If the price breaks down from there, I'll be looking for a return to origin, back to where my trade will be. Pick up my trade and watch it come all the way down here. Okay, that's one option. That's like option one. So I'm going to be watching in this area of interest. There's no way I'm going to be trying to. Well, I say things like grabbing a falling knife. There's no way I'm going to try and grab a throwing knife either, a knife that's on its way up. There's no way I'm going to try and just predict where I should jump in on. I'm going to have areas of interest that I'm looking at and then wait for the trade. Now, the other area of interest, you could even say the area of interest for this is this whole entire gap right here, because we have the peak here as well. We have this point here. And how we get these points of interest is really easy. You grab your fib. Remember, we're just using the fib as a ruler. This isn't some sort of weird magic. We're not saying that all sorts of traders magically appear on the fib lines. That's not what I'm saying. I'm just saying, in fact, let's take it from here. I'm just saying I like to measure where I'm getting the best discount. That's all. Best discount for me will be if the price retraces or traces back to the 60 to 70%, which is right here. A good discount will be anywhere from the golden zone and above. So I look at the price action within these areas, and I try and find where I think there is a good order block within a good amount, since we're looking for a short here, within a good supply. What is a supply zone? A supply zone is when price has come into a zone and then dropped, meaning people want to sell it at that price. There are loads of people who want to sell it at that price, and that supply zone is right here. You can see that happen right here. A big sharp decline, and people want to sell it at the price. So why do we get this big wick coming up? What is this wick? That is what traders fear the most. That's what we call a stop hunt. A stop hunt is when smart money comes in and takes all of your stops, right? And that's what happened here. Everybody was putting stops down there, and this can happen. They fell into a retail trader trap. Price thought it was going to come down. People saw that price is coming back down. People put their stops there. Smart money came in and said, no, I want all of that liquidity. And why would they want that liquidity? Why would smart money want that liquidity? Because it helps them get in the market or out of the market. When we're talking about the derivatives, when we're talking about you're taking a 3, 4, 5, 25 times margin, they're taking your orders. That's what they're doing. They're taking your liquidity. All right? Right when you don't want it. So I had already mapped out this huge big demand zone here. This huge big supply zone here. This is a massive supply zone with a huge big drop in price. Of course it was eventually going to come and get retested. Will it get retested again? Yeah, I think it will. I think it will. So I'll be looking into this demand zone here, and how you should actually try and find where you should be putting your entry point is 50% in your order block, and your order block is within that demand zone or that supply zone. 50% is right here. So I mean, in this case, I think it looks like I was slightly off. Again, I'd rather be slightly off and have my stops taken. Don't know about you. Let's have a look at where this demand zone came from. Maybe it was on the 8 hour. Maybe it was on the daily. Let's have a look. Wait, where are you? Where'd you go? Yeah, look, in hindsight, I can't even remember why I put this demand zone there, but I could have done this as a daily demand zone. It was so long ago, who knows what I was thinking. And that would have probably been a much better trade, taking 50% of the demand zone there, popping this back down to 25%, or if not, at least the swing high, which was there. And that was a 5.7 return to risk to return ratio. That would have been just lovely. So now that we have this demand zone up here, I think there's two possible places we could see the price come up for BNB. It's probably going to come up into this zone here, and if it doesn't have quite enough power, it'll retrace from there. And if it shoots through here, it's going to shoot through from here. Okay, but this is only going to happen if we're in a bullish scenario for Bitcoin. Okay, let's have a quick look at Bitcoin, see where that's traveling. And we're not quite at a bullish scenario for Bitcoin just yet. Not quite. For Bitcoin, I'm expecting the retracement and then a bullish push. And the reason I'm expecting that retracement is because the DXY, well, it looks like we could see that. It looks like we could see that. It looks like price is probably going to come and retest a higher price up here and then do a drop. So that's what I'm expecting. Could I be wrong? I could be wrong. Price is random. What's not random is getting my discount. And I want my discount. Alright, you guys got any coins you want me to review while we're here? And these coins have to be within the top 20 of volume. We're only looking at top 20 volume coins. I haven't looked at GMT for a long time. Haven't looked at Solana. Haven't looked at ADA. You guys got any coins you want to see? Anything you guys are interested in trading? Let me know. Otherwise, I'm going to pick one. Go with Adam. Adam's not too bad. Have a quick look at Chile. We looked at Chile the other day. All right. And for Chile, yeah, not looking like it's in a tradable zone right now. Bottom half of the 50%, very close to that 50% of the range mark. Let me just check my ruler, make sure I'm correct there. %50 of the range, where are you? We'll drop from here to here. Yeah, I think that was right. 50% is right here. Yep, so that is teetering in the no trade zone for me. I'm just waiting for something to happen. I'll be looking to take a short from the top here, but we have had a lower high. So given that we've had a lower high, we could be looking to take another short from this level right here at the 60% retracement level. That might be something to look forward to as Matic comes up. And as Matic comes down, well, we're at the midsection here. I wouldn't be doing any shorts or any longs in this section. I think that's a bad idea. So that's Chile. Take a look at OP. Let me get rid of my monthly lines. Get rid of you. If you don't know what they are, I mark out my monthly, weekly, and my daily levels. I will show you how to do that in a separate, well, maybe tomorrow, maybe in another stream. All right, OP. Let's take a look. Haven't mapped this one out for a while. If we take a fib from the bottom to the top, mark out our 50%. Oh, we are in discounted prices. Discounted prices for OP. That's interesting, hey? What have we got here? This might be an opportunity for a long. If Bitcoin continues to come up, we're looking for a long here. Okay? Not saying I'm going to make it today, but if Bitcoin starts looking bullish, I'll be looking for an opportunity for a long. We're at the bottom half of the range here. These are discounted prices. So we've had, let's take a look at November, the November action here. And yeah, we're looking at these from a high time frame. Smart money always uses the high time frames first. If you're wondering why we're doing that. In November, this is our, we'll start from October. This is our October-November structure. Let's take another fib from the bottom to the top of this November price action. And we are still in the bottom 50% of this month's structure. So we are in discounted prices. Price, we've had a drop base, rally up here, causing an imbalance down here. We haven't retested this imbalance yet. If Bitcoin does have a bearish push, we could see prices come down into here. Let's take a look at the lower time frames. And see what's actually going on. Alright, so we've had higher low, higher high, lower low, lower high, higher low, lower high, and then we've just been ranging. This tells me there's not a lot of volume going on in OP. There's nothing really to push it. The concepts that we're working with here tell us that smart money are the only people or the only things, the only entities that have enough volume to push the price up and down. And we're not seeing a lot of volume here in OP. If we do see a bit more volume, what would I be looking for? Okay, we can see here on the left, we've got a structure here. There's just not very many pushes up. You could say that this was a demand zone there, and we've touched this demand zone a few times. So you could put something like this on. Bearing in mind that even though this is a discounted price, it's not a full discounted price. That down there is the full discount. So bearing in mind that this is still discounted, it's just not as discounted as you can go. Can you get a 3-to-1? If you want your trade to get triggered in, you'd be targeting here. This is one option. Option number 2, because it looks like, if I just can zoom in, you can see here, we've had this demand zone here. Hey, this one, I'll get rid of that. It's right here. This is what I'm looking for. Prices come down, hit off this point, it's come down and hit off it again. We do have an imbalance here, it looks like. That was brought back into, which may get retested right here. Right here, price came down, price gave us a base and a rally up to form a higher high. just to make sure, I'd probably do this. Just keep that doji candle in there and take the full length of the structure there. That's what I'd be looking for. It should help you get a better trade too. So while we have this option here, this one's not going to give us a trade that we want. Not any safety anyway. In order to make this trade viable, I'd have to pull my entry point to 50%, and I don't know if it'd even get triggered. So I'd be looking at doing something like this. Oops, come back there. I do want that there. This way, if I'm wrong, I can pick up a second trade. This is a strategy that I do sometimes. I have my preferred trade here that I'd want to get, and a second trade here that I get as a you know, second place prize. In some situations. Not in all situations. I prefer this one here because if price breaks through this one, it's going to satisfy rule number 4, where if price breaks my stop, we are changing sentiment to being bearish. However, we're not likely to get that trade triggered. This one here is likely to get triggered. Price will probably come back down. And if we just want to look at a retracement, where would a retracement option be for a long? So fib from the bottom to the top, targeting the 60% retracement level. We have an area here where we have had a significant push up. This is a lovely zone there. All right, get rid of that. And you can put in, let's make this a bit smaller, a lovely long right here. And this one would be trying to make sure we can get a 3. Oh, look at that. That's a 5. That's fantastic. In fact, all of these could probably go to there. Oh, right there. A 5 risk to reward ratio. That's fantastic. All right. Now, what would I be doing? I'm not going to be putting all these trades in. Remember, I'm going to be waiting for price to come down and price to sit in this zone, because it's going to get stuck in that zone and show me, is it going to go down this way or is it going to come up this way? If price comes up that way, yeah, that's a confirmation. Once it gives me a confirmation, my trade goes in. If price continues going down, well, I'm looking at my next zone. So if I see the confirmation that, hey, you've got something here, it'll come back down to origin, and then it's going to go up higher. Okay, these are our smart money concepts. Looking for that confirmation. So that's my plan for OP, or OPU. I don't know how we call this one. How do we call this one? Alright, so that's my daily roundup for the day, guys. I hope you've learned something. I hope you've enjoyed it. For me right now, I don't have any trades on in the system. I have trades in the orders, in the order book, but I don't have any trades that are activated. Trades that I have, I've got Matic long, a BTC long at the bottom of the range there, and I've got an ETH long at the bottom of the range and an ETH long in my desired zone. And so an ETH at the bottom of the range, just in case I'm not awake when ETH comes back down, I feel pretty safe that this is a pretty good trade to have. And I'm only putting them in the book if I feel pretty safe. Second trade that I have in the book is if ETH comes down below this discount line here and gives me the retracement. That's what I'm looking for. So those are in the book waiting to be picked up, and I hope they get picked up. I don't want to over risk myself in the book though. So my Bitcoin trade that I have in the book is only if Bitcoin comes all the way back down to the bottom of the range. If it does, I'm going to pick it up. My Matic trade, I have 2 Matic trades in the book. I'll just show you those. Where are we? And now you might be thinking, hey, these trades don't look like they're going to get triggered. They will eventually. The price will come back and retest those. Absolutely, that's what it does. The Matic trades that I have, again, bottom of the structure here that may or may not get triggered in, and here a good retracement zone here. Okay, I'm not expecting the bottom of the structures to get hit this time just yet. I am expecting for these 3 coins the price to come down and to retest these zones and push up. If that does fall through, I do want to pick up these bottom of the ranges. But you know what? Looking at these orders right now, I'm actually thinking I'm a bit too overexposed. I've got 3 trades on. I've got 2 trades on at this zone, and I've got 3 trades on at this zone. I want to keep the lower trades on. I'm going to get rid of Matic here. I'm just going to wait and watch. If I miss out on that, I miss out on that. So I'm just not happy having that amount of risk at the moment. So 0.7901 is my entry point there. 0.7901. I'm just going to get rid of that one. So we've got 3 trades at the bottom of the range, 1 trade at the retracement level that I'm looking for right here. And then this one I'm going to watch for just to see what happens. Just see what happens over the next few days. Or even in the next 24 hours. Who knows? Who knows? Now, if Bitcoin goes bullish and all of a sudden I'm looking at ETH, I'm looking at Bitcoin in the bullish, I'm going to be readjusting my Matic trades. I'm going to be looking for an opportunity to do a long here in Matic because Matic is at the bottom of its range. But I'm not looking to do a long just yet. I'm looking to do a long only when I know Bitcoin is bullish. Alright guys, I'm going to, if any of these trades hit, if we get some price structure movement, I may stream again tonight. Otherwise, I'll probably be back tomorrow. Most likely. Hope you guys have a great day. Thank you for watching. It's been great just streaming my thoughts on Twitch here. And make sure you catch me on the next stream, guys. Thanks for your support. I really appreciate it.